Hello, good morning to all. Welcome to today's Daily Dose of Market Insights by OANDA. I'm Kelvin Wong, the Senior Market Analyst of OANDA Asia Pacific. So very good morning. Today is Tuesday, the 28th of November. So before we start our Daily Dose, let's take a look at the disclaimer slides first. All right. So let me wait for the screen to refresh. Yep, here we go. So leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so let's kickstart with our usual daily dose. The gist of the daily dose is to have firstly a recap of key events and market performance in the European and overnight US session yesterday, and also to actually highlight what are the key events to look out for today, and to round up will be the key short-term technical outlook on the broad-based asset classes. So let's get started off what happened yesterday. So yesterday was a rather lukewarm session in the US stock market. Majority of the benchmark US indices didn't actually move quite a fair bit. Yes, they closed down negative, but the negativity is not so severe, ranging from a loss of negative 0.2% to negative 0.4%. So if you look at the heat map of the S&P 500, I highlight in my screen over here. So what I could see over here is the one that is still holding the fort in terms of the positive performance is still the mega cap stocks, the Magnificent Seven mega cap technology oriented stocks like Amazon with a gain of positive 0.7% that outperformed the benchmark S&P 500 yesterday, and as well as the Nvidia, the AI, we call it team play semiconductor chip stock actually rallied close to 1% yesterday, and also Microsoft up 0.31% to print a fresh all-time high. So all in all, what you could see over here is that yes, it's kind of still heavily concentrated on the Nasdaq 100 component stocks, which is the seven mega cap stocks. All in all, the rest of the benchmark US stock indices like the Russell 2000, the Dow Jones Industrial Average, did not actually show very severe negative performance. So if you look at the Dow Jones Industrial Average ended at negative 0.16%. The Russell 2000 ended at negative 0.35%. But that's for the US market. But overall, what we could see over here is that the US 10-year Treasury yield continued to inch downwards. So if you look at the US 10-year Treasury yield over here, let me highlight to you all. So the 10-year yield, okay, continue to actually be rather lukewarm or lackluster below the 20 and the 50-day moving average. So now attempting to break below the near-term support of 4.33. Negative reaction right at the 20-day, 50-day, 20-day moving average, and as well as the medium-term ascending channel support that has been taken down on last week. All right, and there's a bearish reaction of it. So all in all, what you could see over here is that this potential short-term downtrend that is in place since the 19th of October high on the 10-year US Treasury yield continue to be intact. So that actually translates to further potential dollar weakness. So this very much evidence in the US dollar index technical chart, which has been trading much lower below the 20-day moving average, 200-day moving average, pardon me, in the last two sessions. And right now during the AC session is now breaking below the near-term support level at 103.30. All right, 103.30. So that actually also translate to further weakness, potential weakness on the dollar major pair, which I will highlight to you all in a while from now. Then what other news event to take note of over here is kind of a resilient US consumer that is still continue to actually spend despite this ongoing we call it tighter financial condition being we call inflicted by 1.5 years of interest rate hike by the US Federal Reserve. So what you could see over here is that you know that Thanksgiving Friday is a Thanksgiving weekend sale, and on Monday is Cyber Monday. So that's considered as a a day of we call it mega sale day, where retailers offer, we call it steep discounts or merchandise to entice consumer spending. So what I could see over here is that Adobe, which actually compile this spending habits during this holiday periods of US consumer, actually they recorded is they spent as much as 12.4 billion online during Cyber Monday, which was yesterday, according to Adobe, which actually adjusted its initial forecast of 12 billion upward based on stronger than expected spending on last Friday. So all in all, it seems to me that right now US consumer still remains pretty much resilient. So that could actually kind of give a bit of we call it a bit of support for this ongoing medium-term uptrend that has taken shape on the US benchmark stock indices since late October this year. All right, so that is for the US consumer retail spending side of the story. And in ECB, so over here that yesterday there was actually a speech by ECB President Lagarde. So it still seems to us that ECB still kind of not raising the flag that they are actually done with their inflation fighting, based on Lagarde's speech yesterday to the European Parliament, saying that inflation fight progressing but not yet done. All right. So overall, despite it seems to us that they are still not giving a clear indication when they will actually start to cut rates. But however, the market is now very similarly jumping ahead of the gun by pricing in the first rate cut to come in as soon as April or June next year for ECB. So that is pretty much in line with the Federal Reserve expectation as well, where market is expecting a high odds of a chance based on the CME Fed Watch 2 that highlighted in the last few sessions of my daily market dose of or daily market insights video, to come in also very similar in the first half of next year. So what's interesting over here is that she did actually mention towards the end that new staff projection due in December, that means during the December EC meeting, will include figures as long as 2026. So that's actually ECB dot plot projection, okay, in terms of key economic metrics for Eurozone. So market participants will be keeping a close eyes watch on the inflationary growth, especially stretching forward to 2025 to 2026, all right, during that December ECB meeting. But all in all, it seems to us that she still sound relatively hawkish. So that actually also kind of put downside pressure on US dollar yesterday. Okay, now going forward to on Thursday will be this ongoing dispute between Saudi Arabia and the rest of the OPEC members. Why? Because Saudi Arabia, being one of the leading OPEC Plus member, actually advocate for a further extension supply cut heading into at least the first of half of 2024. But that actually initial scheduled talks that are supposed to be happen. That meeting was supposed to happen on last Sunday, was pushed back towards on this coming Thursday, 30th of November, due to dispute over African quotas. That means, i.e., the African members inside OPEC Plus actually refuses to actually adhere to actually Saudi Arabia requests to actually continue their respective quota cuts heading into 2024. So going forward, we will start to see much more choppy price action in WTI crude oil prices. So later I'll share with you what is the range to watch out for today. All right. So now with that, that's pretty much sum up for the key highlights that took shape yesterday. Events that took shape yesterday that has an impact on the various asset classes. So now let's move on firstly to the short-term technical outlook that I share with you all. So now let me focus more on the screen instead. So now let us start with the FX market first. So you know the FX market, the dollar continued to weaken across the board yesterday. So what we could see over here is that the euro dollar. So euro dollar yesterday we do have a maintain that short-term bullish outlook. So the euro dollar actually retraced and actually staged a rebound of yesterday's intermediate support level at 1.090. So with that, given yesterday bounce and the RSI holding above the 50 level on the hourly RSI, so I will be actually having a much more tightened key pivotal support for today by shifting up from 1.085 to 1. Give me a minute. Okay, so I'll highlight over here to 1.090. Okay, so 1.090 will be my Titan key pivotal support for today. All right, to maintain this ongoing bullish short-term bullish outlook on the euro dollar, with the next resistance to come in at 1.099, followed by 1.1040. Okay, so resistance 1.099 followed by 1.1040. However, if we start to see a breakdown below 109, then potentially we will start to see a kind of a minor corrective pullback to test the last Thursday's swing low area, which is also confluence with the minor congestion area of 17th of November at 1.0850, and also the 200-day moving average coming to add as support at this level as well at 1.0850. So having a Titan 1.09 key short-term pivotal support for today to maintain that short-term bullish outlook on the euro dollar. Okay, now moving on, next will be the sterling dollar. So on the sterling dollar over here, it's going to pretty much inch upwards, shaping higher high and higher low. RSI also managed to bounce off from the 50 level mark over here. So all in all, still maintaining that short-term bullish bias with a Titan key short-term pivotal support for today at 125.60. So as long as 125.60 level holds on the sterling dollar, potentially the next resistance to come in will be at a 126.80 followed by 127.20. However, if we start to see an hourly close, a breakdown below 125.60, then this short-term bullish outlook will be negated to kickstart a minor corrective decline to retest the 200-day moving average, acting as a support at 124.40 as well, which confluence with last Wednesday's swing low and the minor congestion area of 16th of November to 17th of November. Okay, now what's interesting over here will be the Aussie dollar. So still recall that the Aussie dollar yesterday we actually flipped to a bullish bias. Why? Because we start to see momentum starts to start to picking off in the Aussie dollar. So for sure, yes, indeed, the RSI also managed to break above a corresponding parallel resistance that I draw over here and hasn't actually hit the overbought region yet, which is 70 and above, clearly breaking above the 65.95 level, which is the 200-day moving average. So from a medium-term perspective means i.e. multi-week perspective, the next resistance to watch will be at 6815/69 figure level, which is the major descending trend line that is in place since 25th of February 2021 high. But however, what is the short-term resistance level to watch on the Aussie dollar? That means from a multi-day and an intraday perspective. So the short-term levels to watch on the Aussie dollar. Firstly, the resistance will be at 66.75/6710. The upper limit of this much more steeper ascending channel that I draw from the low of 17th of November, given the bullish breakout that was seen above the 200-day moving average yesterday at 65.95. So with that, I will have a much more tightened key short-term pivotal support level for today, which was yesterday's swing low area at 65.70. So as long as 65.70 holds, potentially the Australia dollar may start to see the next intermediate resistance coming in at 66.75/6710 level. And also hourly momentum also remains to be healthy on the positive side. Why? Because RSI hasn't started to shape any bearish divergence at the overbought zone over here and continue to shape a series of higher low holding above the 50 level mark. All right, so but however, if we start to see a breakdown below 65.70 and hourly close below it, then we may start to kickstart another round of a choppy minor corrective decline to retest this 65.20 65 figure support level, which is all coming close to the 20-day moving average, I think, as a support as well. So that's for the Aussie dollar. So for dollar yen, it's going to push down within our expectation right now, but broken below the 148.40 near-term support level that we highlighted yesterday. All right, so this level has really been taken off on the downside. So with that, the RSI now is hovering at the oversold region, but there is no clear sign of a bullish divergence. Okay, that means RSI going to shape lower low. Okay, indicating to us that this new leg of short-term downtrend that kickstarted from last Friday's swing high is still pretty much intact. But given that it's really hit the oversold level, there could be a rebound back into the to retest it's just a zone to retest 148.40 slash 148.90. So into this zone here, there could be a potential rebound back into this zone of 148.40, 148.90. So with that, I'll be using last Friday's swing high area, which correspond to the range top, in minor range top that is in place since 22nd of November. Also the 50-day moving average acting as a resistance at 149.70. So bear in mind, in trading view, we could actually overlay a higher time frame element on a shorter time frame hourly chart, like what I did to do multi-time frame analysis on a single chart. So with that, 149.70 is indeed a key short-term pivotal resistance for today to maintain any potential rebound heading towards into this zone of 148.40 slash 148.90, given the oversold reading on the RS hourly RSI. So as long as this level is not surpassed to the upside, 149.70, potentially the next support level to watch will be 147.30, followed by 146.60 slash 20. So still maintaining our short-term bearish outlook on the dollar yet. Okay, but however, a breakout above 149.70, then this short-term bearish outlook will be in jeopardy to see a squeeze up towards 150.20 slash 150.80 resistance zone. Okay, so that's pretty much cover on the dollar side of the story. So now let's move on to the benchmark indices, the major benchmark indices. So let's start with the US benchmark first. So no change, the Nasdaq 100 going to actually bounce off from the near-term intermediate support that we highlighted late last week, which is at 15,915. It bounced off it. Then thereafter, during the Asia session right now, it's going to actually trade sideways above this level. So still using the 1575 15,765 slash 15,690 as my key short-term pivotal support level, which correspond to the minor ascending channel support from the low of 27 October. A break above 16,160 sees the next intermediate resistance to come in at 16,310. So still maintaining that short-term bullish outlook on the Nasdaq 100 as long as 15,690 key short-term pivotal support holds. But however, if we start to see an hourly close below it, potentially we will start to kickstart a minor corrective decline towards the next intermediate support at 15,380, with confluence with the 20-day moving average as well. All right, so now the Dow Jones Industrial Average, which the US Wall Street 30, going to hover yesterday upon breaking above the first resistance at 15,295. So this level seems to us will become like a near-term support level right now. Okay, which is this 15,295. So as long as this 35,000 figure level holds, which correspond to this ascending channel support from the low of 10th of November holds, we will actually maintain our bearish, we will still maintain that short-term bullish outlook on the US Wall Street 30 index, with the next intermediate resistance coming in at 35,830, we saw confluence with the top of the minor ascending channel. However, if we start to see a breakdown below 35,000 figure level, then this short-term bullish outlook will be invalidated to kickstart a minor corrective pullback towards the next intermediate support level at 34,385 slash 34,190, which confluence with the upward sloping 20-day moving average, and as well as the pullback support zone of this former descending channel resistance that had from the high of mid-July this year, end of July this year. Okay, so that's for the US Wall Street 30. Moving on, next will be the German 30. So for the German 30, price action yesterday continued to be pretty much flattish or start to actually trade sideways, holding below the first intermediate resistance at 16,050 that was made on last Friday. So still using this Titan key short-term pivotal support level. So I put it a zone for today, given the fact that right now the lower boundary of the short-term ascending channel is at this level over here. Okay, at 15,850. So I will just have a zone 15,930 slash 850 for today. As long as this 15,850 holds, we correspond with this minor ascending channel that support that is in place since 27 October 2023 low. Potentially we could actually see the start of another potential up leg. A break above 16,050 sees the next intermediate resistance to come in at 16,200, which also confluence with this former minor congestion area of 19th of July to 27th of July. right? However, if we start to see a breakdown below 15,850 and hourly close below it, we will start to kickstart a minor corrective pullback to retest the 200-day moving average and the 20-day moving average, acting as a support zone at 15,660/15,560. Okay, moving over to Asia, over here, what you could see over here is that the Hong Kong 33 index going to be lackluster. Why? Because of this fear of this ongoing we call it flu infection that is being flared out in China among these children. Yeah, so there's a lot of rumor that it could be a resurgence of COVID-19, despite the fact that the China health authorities say that it's just a typical a flu outbreak, but that actually caused a bit of jitters on the Hong Kong 33 index. So we feel it still continue to actually have a neutrality stance as you continue to trade below the 20 and the 50-day moving average, also acting as a resistance slightly above last Friday's swing high at 17,680, but still managed to hold above this minor ascending trend line support that is in place since 24th of October low, now acting as a support at 17,300. So still having that neutrality stand between 17,680 and 17,300. Only a clear breakout with an hourly close above 17,680, then potentially we could see a resurgence of a minor potential push up to retest last Tuesday's swing high in first step at 18,040 level. But however, if we start to see a breakdown below 17,300, then we could see a retest of that major support zone at 16,980/16,800 on the Hong Kong 33 index. Okay, now moving on, next will be the Japan 225. So no change on the Japan 225 as you continue to trade sideways after a test on our first intermediate resistance level on last Friday at 33,825. So still using the 33,100 as a key short-term pivotal support level. Why this level is important, it confluences now closely with the upward sloping 20-day moving average and as well as the pullback support of that former medium-term descending trend line that was in place since 19th of June that has been broken out on last Thursday. Okay, last Thursday. So using 33,100 short-term pivotal support, as long as this level holds, still maintaining that short-term bullish outlook on the Japan 225, breaking above 33,825, sees the next intermediate resistance to come in at 33,410. However, if we start to see a breakdown below 33,100, then potentially it may start to translate into a minor corrective pullback towards 32,800, followed by 32,200, which is confluence with the 50-day moving average, acting as a support level as well. Okay, and all in all, why is it positive now? Because of momentum, price action going to do lower low, but however, on the RSI, it start to shape a higher high after hitting the oversold level yesterday. So that is why I call a bullish divergence. It indicating to us that potentially that retracement that was seen since the start of yesterday started to lose its downside momentum. Okay, as shown on the bullish divergence at the oversold region on the hourly RSI momentum indicator. So that's pretty much sum up for the outlook, the short-term outlook for today on the major stock indices. So let's move on to WTI crude oil. So based on the West Texas crude oil over here, price going to congestion while swing below the 20-day moving average and the 20-day moving average now acting as a key resistance at 78.10. So this 78.10 level, why is it key? Because this level was tested during the push up from 17th of November to 21st of November. So during this push up, this was actually the rumored that Saudi Arabia is in favor of extending its supply cut heading into 2024. Then thereafter, that supply cut start to see a bit of wobbliness among dispute among these OPEC plus members. So for today, I'll much have a tightened neutrality stance, given the fact that yesterday it managed to bounce off from last week low, which is 74.30. So having a more tighter neutrality stance between 74.30 and 78.10 for West Texas oil for today. So expecting to trade within these two range. But however, if you start to see a breakdown below 74.30, it will revisit the key medium-term support level at 72.70/72.40 on the West Texas oil. Okay, then what's cooking for gold? So what you see that US dollar weakness has continued to actually translate into further gold strength that was seen yesterday. So gold yesterday managed to break out above the former swing high area of 27 October and 3rd of November, previously acting as a resistance at 2006. So yesterday it tested this level, managed to shape a pullback of this level. So now this is a 2006 is like a near-term support level. So with that, I'll be using a much more tighter key short-term pivotal support for today for gold. So very closely below the 2006 level. So this is the former swing high area of 23rd of November. All right, so acting as a pullback support level right now at 19,997. So I'll be using 19,997 as my key Titan short-term pivotal support level today to maintain this short-term bullish outlook on gold, heading towards the next, to watch out for the next intermediate resistance zone at 2028/2037. A break above 2037 takes us up towards the major range resistance at 2067/2075. And don't forget, 2075 is the all-time high price on spot gold, that is XAU/USD. However, if we start to see a breakdown below this Titan key short-term pivotal support level at 1997, which I set for today, we may start to see the start of at least a minor corrective decline to retest this intermediate zone. Okay, over here at 19,709/19,670. Okay, 19,709/19,000. Pardon me, 1979/1967, which correspond with the 20-day moving average, I think it's a support level as well. All right, so with that, still maintaining that short-term bullish outlook on gold as long as the key short-term pivotal support at 1997 holds. So with that, that's pretty much sum up with the daily insights that I'll share with you for today. So do have a great day ahead, and we shall speak again tomorrow. Thank you.